welcome to Keeping It Real. It's Nikki Shelton, and I'm here with Carrie. How are you doing today, Carrie?
Doing good. How are you?
Good. I'm enjoying the sunshine. I love the sunshine. It makes me so happy.
I don't blame you. It makes me happy too.
Takes so little. I know, right? So, I've been kind of watching the stock markets. I'm actually here with my mom and stuff, and I know she watches it. My husband watches it. I mean, like pretty much everyone I know watches the stock markets, and it's been really volatile lately. And so a lot of people are kind of wondering what to do with their investments and stuff like that. And from the research I've been able to come up with, it seems like when you invest in real estate, you're getting between a 6 and 12 percentage annual return on your investment. So, it's always been a really good investment. And I'm thinking, if you're not sure what to do right now, that might be the way to go. What do you think?
I would have to agree 100%. I was speaking to a client this morning, and, he wants to have his daughter purchase a home. And so he's trying to encourage her and said, it's always the best time to buy real estate. And I said, I agree. You just have to be ready.
Yep, you do. You have to be ready. As long as you can do it, it's a good time. And I know my kids were out here because it's my mom's 85th birthday this week. So happy birthday to my mom.
Oh my goodness.
I know, right? So we did a little surprise for her, and I had 6 of my kids fly out to see her and stuff. And so we had a little birthday party for her this weekend. And the prices, the housing prices are so different from Washington versus Nebraska and stuff like that. So, they're looking in like just investment opportunity. Absolutely. And so, I mean, it's a growing area as well. So it's like, absolutely. So let's learn a little bit today about some ways you can do some investing. One type of loan, right?
Yeah.
All right. So today we're going to talk about DSCR. No, I know, and when my in-laws passed away, my husband was left with some money and stuff. And that was one of the things that we were kind of looking into, was to looking at purchasing an investment property. And because we're both self-employed, the DSCR was one of the top loans that we were looking at, because it requires so little as far as documentation and stuff, and just it's easier to work with than trying to get approved and have to live in the house and all that kind of stuff that you do when you buy a primary residence. So that's what we're going to talk about today, is the DSCR loan and what we can do with it, right?
Yes, absolutely.
All right. So who would this be an ideal loan for, Carrie?
Definitely for investors that, like last week, are self-employed and don't have a lot of income documentation, or they're just looking to get their foot in the door. They might already have a primary residence and they have cash reserves ready, but they might not qualify for the home just based on their own debt to income ratios. But there has to be a way to get started, right? So this loan is designed for people that have the cash reserves, have the down payment, but maybe might not qualify on paper.
Right. Okay. And so the down payment is going to be a little bit higher, right? I think it's like 20%, if I remember correctly.
It is 20%. Yes.
Okay. So kind of like a conventional, well, like in the past with the conventional loans, because that's what they used to be. Now they're not necessarily, but in the past, it's what a conventional loan was a long, long time ago, or a while back anyway. So this would be similar to that one, kind of. Okay.
Exactly.
Anything else?
So if somebody from a foreign country wanted to come in and maybe purchase like a VRBO or Airbnb, they can also come in and purchase a home with one of these DSCR loans. Short and long-term rental owners. So there's a lot of people that have multiple properties, and they, maybe want to either refinance them or purchase new ones to add to their portfolio. And this would be a good way to do that.
Okay. So back to the foreign one, just because I know that there was some other changes recently. So they can't, in my understanding, they cannot apply for like the Fannie Mae loans and that kind of stuff now. Is that correct? Is that what I heard?
They have to have an ITIN number or a social security number. Right.
Okay. Okay. Perfect. Okay. Makes sense. All right. Let's continue on. So why they work for investors?
Well, this is the beautiful part about it. It's going to qualify just using the rental income from the property. So on any normal purchase, you are going to order an appraisal. Well, when we do an investment property like this, we're going to do an appraisal with a rent schedule. And so if the rent on the property can cover the debt service coverage ratio, so basically cover that payment, plus sometimes they'll let you go a little under, then your loan will help just using the cash flow that the property will produce.
Okay, perfect.
Much easier than.
Right. And you don't have to come up with like your 1099s. And I mean, I don't remember if we had to do that. It's been a while since we looked at doing this. So it's been a while, but I don't remember having to come up with a whole bunch of documentation either. It was a lot less documentation that had to be provided because it was really kind of done after the fact, correct?
Yes. A lot of it will have to do with making sure you have the assets in the bank. So they'll need bank statements and they will need photo identification. And if you already own some other properties, they'll ask for those, mortgage statements and property, homeowners insurance, different things like that. But it's a very low document loan. And the good thing is there's no limit on the amount of finance properties. If you were to go with a traditional Fannie Mae, Freddie Mac program, you're limited to 8 properties. So on this, I think it's either 8 or 10. I'm sorry. On this one, you have no limit on how many properties you can finance.
Perfect. Okay, perfect. So that's kind of cool because if you, really wanted to take over like an area and have a bunch of rentals and do that, that would be a great time to do that. So, okay, fabulous. All right. And that's pretty much what we got for you today, which is really short and sweet. And I love it.
It's a short one. And we thought, after that kind of long one last week, this would be a nice one just to have it be quick, simple, easy. But, if you have any questions about whether or not you qualify, always free to come and talk to me or talk to Nikki. It's really helpful to know that there are other tools out there that if you might not have the debt to income ratios that could qualify you, but you have cash on hand, let's talk. Let's see about getting you started on having a real estate portfolio and starting to expand your wealth.
So I do have a question for you because I know I'm thinking of like sometimes I have like a lot of contractor friends, for instance, right? And sometimes they want to buy a home because they want to work on it. If there's a rehab part of it, are they able to do that? Like I know the FHA won't let you for their rehab loan. I mean, it has to be an outside contractor. It can't be you, even if you are a contractor. Are they able to do some of those repairs on their own at that point?
Well, the home will be theirs. There's no rehab loan for them. They cannot get the all of the expenses that they need to have covered. If they wanted to remodel or something, they can't go above the value of the home in order to get the money to do any type of repairs on the home. It's only for what the purchase price.
But there's not stipulation saying like you have to get this done before you do that because like the rehab loan you have to do that. So just wanted to make sure about that one.
So once the loan is closed, it's yours outright. So if you had a home, they're going to definitely look at how good the home is and if it's ready to rent. Because if it's not, it likely will not qualify for this program. But if there are extras, I did this for someone who wanted to turn the home into a place where she could take care of the elderly because she has her own at-home care. And so she needed to put in showers where wheelchairs could go in and put handrails next to the toilets and different things like that. So the home was in very good shape, but she just wanted to make it a little bit nicer and also do things that could be handicap accessible.
Or maybe if you wanted to do some updating that. Or if you want to do some updating and do that and then increase the rent after that, maybe you could do something like that.
Absolutely.
Okay. Good to know. All right. Thank you, Carrie, so much. It's always a pleasure having you helping me out here because you always know so much about these loans. I love it.
Thanks for having me.
All right, you guys. Thanks for joining us. We'll see you next week at same time, same place.
See you next week.